Hello and welcome to the Investor Financing Podcast, and I'm your host, Beau Eckstein. And on today's show, we have Robert and Leonard. And it's going to be an interesting conversation. We're going to talk about house hacking. We're going to talk about long distance investing. We're even going to talk about RV hacking, I guess you'd call it. What's the acronym for RV? Is it? I don't know.
Yeah, I call it RV hacking or RV investing.
Okay, thank you. That's great. So we're gonna cover the gamut today on things that I'm interested in as well. So it's always good to have a guest on that can talk about something that I'm interested in, because I have a lot of questions as I'm buying things out of state right now too, and just learning from other people what they're doing. So it's great. But Robert is a real estate and stock investor, entrepreneur. He's a founding member, managing partner of the real estate firm Piranha Capital. He's the author of The Everything Guide to House Hacking, and he can be found at theinvestorpodcast.com, where he is the host of two podcasts there, Real Estate 101 and Millennial Investing by the Investor Podcast Network. Welcome to the show. Thanks for coming.
Yeah, thanks so much for having me, Beau.
All right. So Robert, just a quick deep dive about how you got started in real estate investing and what were you doing before?
Yeah, so long story short was my dad told me that as I was going into college, as soon as I graduated, he said, listen, you're going to start earning a salary. You're going to have to pay me rent if you're living at home when you graduate. So I didn't really want to do that. I just felt that it was going to be throwing away money. So as an 18-year-old kid going into college as a freshman, I told my dad and all my friends and family that I was going to buy my first house as soon as I graduated college so that I didn't have to pay him any rent. Everybody thought I was crazy. I come from a very blue collar family. My dad's a single dad with me and my brother. Nobody's ever made any type of investments or anything like that. So it was really this kind of outlandish statement to say that I was going to buy a house essentially as soon as I graduate college. So I really wanted to prove everybody wrong. Ended up working nearly full time throughout college and saved up as much as I could, really started to study and understand what I needed to do to buy a house, and put myself in a position to buy my first house while I was a senior in college. And while I was a senior and I bought that property, I ultimately accidentally fell into house hacking. I wasn't doing it to become a real estate investor. I wasn't buying that property to become a real estate investor. I had an interest in it, but I didn't think you could do that unless you were really wealthy. So I was simply just buying the house to not have to pay my father rent, and ultimately turned into house hacking. Once I learned that that was a real estate investing strategy, I realized bigger pockets existed. I learned about all these other people that were doing what I thought wasn't possible, and I realized they were no different than me. And so I realized I could do it. I could invest in real estate, and kind of the rest from there is history.
That's awesome. So now can you talk about how you transitioned from your house hacks, and we'll go back to house hacking a little bit, but then you started buying out of state, and you kind of have perfected that art. And so for somebody that lives on the West Coast, so I'm right now, I live in Las Vegas, but I was formerly in the Bay Area, where everything's $1 million plus. It doesn't really make sense for a lot of us to invest in our backyard. Maybe flipping is good, and maybe some short-term rental stuff will cash flow. But I got the itch years back to start buying property out of state. And so why don't you talk to us about your journey and what markets you like, but particularly in general, how you determine a market you might be interested in investing in. Like, what kind of metrics do you look at, and what kind of guidance would you have for people looking to invest out of state? Like, how do you find a property manager? Like, how do you do things remote? How do you make sure your property managers aren't overcharging you? Things like that.
Yeah. So, I mean, there's a lot there. So we could talk for an hour just about that stuff. But I got into long distance because I live in the Boston area, not quite as expensive as the Bay Area, but it's pretty expensive too. And so I'd done two house hacks. I felt like I was ready. I felt educated enough, and I felt confident enough to buy my first rental. But the reality was, to get anything, even like a duplex or anything bigger than that, was at least 400 or 500,000. And at the time, I wasn't ready to do a BRRRR or any of these kind of more complex strategies that you can do to get in with low or no money down. So I was looking at really a turnkey rental for 20, 25% down. So when you consider that down payment, the purchase price, and closing costs, I'm looking at somewhere of north of $100,000 to buy a rental here in the Boston area. And that's just a duplex, maybe a triplex. And so it didn't make a lot of sense for me. I didn't really have that money. I could have probably scrounged it up from a bunch of friends and a little bit of savings that I had myself, but it didn't really seem like the best option for me, not only because I didn't really have the money, but more importantly, it seemed really, really risky to me. And so I didn't think putting over $100,000 into my first rental was wise. I said that, if I screw this up, if I have no idea what I'm doing, then there goes $100,000 or more. So I said, how can I de-risk this? And the way I defined risk was the amount of money that I would lose from mostly the down payment. And so I said, okay, let's see where I could buy a house for much less and still cash flow. And I had heard a quote that said, live where you want to live and invest where the numbers make sense. And so that really spoke to me. I believe in technology. I wouldn't say I'm a technologist, but I'm pretty good with technology. So I said, all right, let me leverage technology to invest out of state. And so what I ended up doing was I found this small market in Texas, and I decided to start looking there to buy properties. And if you want to dive into a little bit more about how I found that market, I can. It was a pretty lengthy process, but I can explain to you how we got there. And so I ended up buying there, and I ended up buying 6 single family houses there, and we're continuing to scale to this day.
Yeah. I would be interested in learning how you said, I like this market. We talked before we went live on the show, and I was telling you about my strategy. And I said, I like the small multi-units properties, and even sometimes single family. I do own single family, but I was like, you know what? I mean, to me, the duplex now is more important than ever, because with inflation, with the price of everything being what it is, the new generation of buyers are going to almost have to house hack. And so that was kind of my mindset. But I'm curious to learn from you what you're looking at to determine why you bought there, and in other markets you're exploring. You don't have to get in the nitty gritty of what markets they are, but just kind of the benchmarks you're looking for. And then what tools do you use? Like, I just started using a tool, and I really like it. It's called dealcheck.io. And I like it because it's super easy. I need things that are easy. I'm just curious what you use and how you run your numbers quickly.
Yeah. So my process to find my cities is not easy by any means. To run a deal analysis of an actual property, super easy. I could do it in probably a minute or two. But to actually find the markets that I want to invest in is a little bit more of a lengthy process. So when I decided that I was going to go long distance, I said, okay, now I need to find a market that is a good market. I don't know these markets across the country. So I gotta look, how can I determine this? And I could talk to people, which I did, but anybody I talked to on the internet that was also a real estate investor, they said, why don't you just invest in these markets that are really known for being long distance friendly markets, like where basically all these turnkey companies are. You get your Memphis, Tennessee, your Indianapolis, Indiana, Birmingham, Alabama. And my background is in stock investing. I studied the stock market and Warren Buffett for about 8 to 10 years before I got into real estate. And so I said, to me, as a stock investor, we like to go and find opportunities where there are not other people, where there's less competition. So to me, to go into a market long distance where there's already so much competition, it just didn't make any sense to me. So I said, there's 7,000 cities across the US. There's no way that those are the only markets that are suitable for long distance investing. I said, so let me find something that has the same or better characteristics and has less competition. So what I ended up doing was I hired a software developer to scrape the census data off the internet for me. And there's 6 demographic data points that I'm looking for to define a good market. And so I asked him to scrape those 6 demographic data points for 7,000 cities across the US. And my background's in finance and accounting, so I'm pretty good with Excel and data. And so I ranked every city from 1 to 7,000 based on those 6 demographic data points. And I looked at the top 25 and then I went through and I said, okay, is there inventory in these markets that I want to buy? So if I want to buy a single family, is there single family available? If I want to buy multifamily, is there multifamily there? And then the second thing was, are there real estate professionals that I think that, like, are there enough there? Are there electricians, plumbers? Are there a lot of real estate agents, property management companies, et cetera? Anything that didn't have the asset class that I wanted, or real estate professionals or construction professionals, they were crossed off the list. So out of the top 25, I was left with maybe, I think it was about 10 or so, 10 to 15 that fit all of my criteria and had good demographic data. So I ended up just starting making offers all across those 15 cities. I was agnostic. I didn't really care because I knew all 15 met my characteristics. I knew they were all going to be really good markets. And so I think I had 13 offers out at once. I had across Idaho, Texas, Florida, Alabama, North Carolina, Ohio, like they were all over the place. And I basically said, wherever I get my first deal, I will then continue to focus there until either the strategy proves to not work or I can't invest there anymore or whatever the reason is. Then I'll expand to one of these other markets. And so I ended up getting my first deal in this small town in Texas, about an hour and a half northwest of Dallas, and or actually of Fort Worth, I believe. And I've continued to invest there for 2 years, 3 years now, and it's gone really, really well. And so that's how I determine which markets are good to invest in.
So are you mostly buying single family then?
Yeah, so my plan was multifamily. I told myself I'd never buy a single family house, and then I ended up buying single family because that was what was available in this market. And I'm actually really liking the single family space. It's tough for scalability, but there's a lot of other things that, people often criticize single family, and I understand that it's tough to scale, but I've actually recognized a lot of benefits from single family that I really like.
And you bought at a good time. You probably got some on the early ones, probably got some pretty good appreciation. What benchmarks are you looking at? Like when you're running it through, just like, okay, I'm looking at a debt service coverage ratio of it's got to be this matrix. I have to have, less than X amount of dollar out of pocket. What's your kind of criteria?
So my criteria, I only have two criteria: cash on cash and cash flow per door. Now, there's tons of other metrics you can look at, all of which you've mentioned. You can look at IRR, payback period. I mean, there's an infinite number of metrics that you can look at. But when and my background is in financial analysis, that's what I got my MBA in. That's what I worked in the corporate world doing. So I'm good at that stuff. But I just felt that I needed to be able to complete a good deal analysis quicker than going through every single one of those metrics. So what I did was I did a little bit of digging on my own deals, and I said, what metrics are the most important? And for me to hit my goals, the two that were most important were cash on cash and the cash flow per door. I found that if I can hit my two metrics on those two metrics, then pretty much everything else took care of itself. As long as those were satisfactory, everything else took care of itself. So I'm looking at cash on cash and cash flow per door.
And so you were buying stuff that didn't need much elbow grease. I mean, you're buying pretty clean properties, or were you doing kind of
both? So my first one was turnkey. It was my first time going out of state. It was like a totally new experience. So I bought turnkey, ready to go. All I had to do was put in a renter pretty much. And so that was great. I bought it for, I believe it's been 3 or 4 years now. So the numbers might not be perfect, but I believe I bought it for 65,000, and it rented for 900 or 950. So right off the bat, that was a pretty good deal for just a turnkey. And then all the other deals have all been BRRRR deals. And I've put pretty much zero to no more than $5,000 or $10,000 into every single one of those. They've all just been BRRRR.
So when you BRRRR them, do you have private lenders, or you get like a hard money loan with the rehab budget and fix it and then refinance?
So I actually found a really interesting product at a local credit union down there where I honestly don't even know what they call it, but basically it's through even though they're single family, it's not residential debt. We're taking on commercial debt. So we're dealing with a commercial lending department, but basically the credit union will be my hard money lender up front. And they'll just essentially, what they do is they'll be the hard money lender up front. And then when everything is done, they basically just switch the loan for me from hard money to a fixed loan. And I don't have to refinance. I have no more closing costs, nothing like that. So it's a really streamlined process, and it's super, super cheap because you don't have to pay for all the closing costs multiple times. And so that's the product that I'm using, and it works really, really well.
Got it. And so what LTC, how much do you have to come down on the acquisition side?
15%.
15%. That's pretty good. And then it just modifies. The only difference is that you're potentially leaving a little bit of equity in the deal, which is okay. Like you're not using new appraised value. They're just converting.
Oh, they use the new appraised value.
Oh, wow. See, I always tell people, I am a mortgage broker for a living, but sometimes these credit unions, and I interview them for the show, that there is once in a while you find these amazing lenders out there, these community banks, these credit unions, and it's just phenomenal what you can do. And that's the key. Like when you're going out of state, a lot of times though, what we find is that if you don't live in the area, they don't want to do business with you. So that was great that you were able to find this credit union. Rinse and repeat. Now, do they require full documentation, tax returns and everything as well?
Honestly, I don't believe they did, because they underwrote it like a commercial deal. Can this property support its debt service? So honestly, I don't remember if I gave my tax returns or not, but I don't think it was an issue.
That's awesome. I love that. That's a beautiful thing right there. Now, and so on the exit, they do give you a cash out up to a certain amount based on the AR. They're doing it like a subject to completed value appraisal.
Mhm.
And they're saying we'll lend you 75% of whatever that value is. 85 on the takeout.
Yep.
Oh my God. That is sweet. Okay. So you found, and it was funny. The other guy that I talked to that had a similar credit, bank or credit union was in Texas, probably not the same market as you, but anyways, when you find those type of credit unions, do what you can to stay with them. Hopefully they don't have any lending thresholds or limits. And yeah, I would just rinse and repeat, rinse and repeat, rinse and repeat. So you, on these deals, you pretty much have no money in when you're done, right?
Yeah, some of them, I think the most I've left in was like 7,000. Other than the first one was turnkey. That had, I think I put in total 15, but after that, the most I put in was like 5 or 7,000.
That's awesome. That's like a perfect scenario. The only thing about Texas that I don't like, well, actually most of the markets I'm investing in, the property taxes are high.
Yeah, property taxes in Texas are super high.
Yeah.
But I actually live in New Hampshire, and our property taxes are very high in New Hampshire. So it's something I'm used to. And people ask me that all the time. They're like, aren't you worried about the property taxes in Texas? And, I am. But at the same time, that's in my analysis. My property taxes are an expense in my analysis. So if the cash on cash and the cash flow per door still makes sense with the higher taxes, then that's fine for me.
Yeah, no, that's good. So you have agent contacts, maybe are you starting to do some direct to seller stuff there, or not really? You just
Not yet. I will. I certainly will. But yeah, I mostly just through my agent.
All right. So besides the Texas market, are you investing in any other markets at the moment or looking?
Where I live. So I invest a little bit where I live, just because of my house hacks will turn into traditional rentals. But I have been looking in some other markets, into some markets in Florida and some other markets, but mostly I have such a great relationship with my agent in this Texas market, and I have a great lender there, and I have a great process. So it's really advantageous for me to just kind of rinse and repeat. Now, if I want to get into some bigger deals, they don't have multifamily in this town. So if I want to get into some bigger stuff, then I'm going to have to change markets. But for now, I'm focusing on short-term rentals in Florida. Haven't bought any yet, but that's where I'm looking. My own rentals that came from house hacking in New Hampshire, and then the long distance single families in Texas.
And what's your cash on cash return that you look for? I mean,
so my benchmark is 20% typically, and then $250 per door. Now, if I find a great deal that I think I can get in with a little bit, not too much money, and it's like 15% cash on cash, I'd be okay with that. But for the most part, I'm looking at 20%. Now, I was just talking to somebody the other day. It's unfortunate that the single family is not scalable, because I'm averaging 35 to 40% cash on cash for these single families. And it's not, and that's straight off the MLS. It's without getting really too creative.
Why are you saying it's not scalable? Just deal flow?
Yeah, deal flow and financing. I mean, the financing is great, but it's a lot of paperwork and a lot of closings. Like you can close on 100 unit, you close one time, you do one inspection, you do one appraisal. Whereas you buy 5 single families, you got to do 5 appraisals, 5 inspections, 5 loan closings. It's much harder to scale.
That's true. I think I don't know. I have, like I said earlier, I have a lot of friends that own lots of big multifamily, and I look at them and they're doing huge deals. But I think for me, and I think the majority of people out there, we're kind of looking for like one foot in front of the other kind of investing. Like, okay, so I think you got to figure out what your financial independence number is, right? That's an important thing. Like, how you can not work, right? Like I'm getting older now, believe it or not, I'm 44, right? So, the things I did wrong at the young age, I mean, I was always in real estate as a profession. I was always real estate broker, lender. But I look at all these properties I flipped in California, never thought about, keeping them as a short-term rental or anything. And like, even like, I just flipped a house 2 years ago before I left, and it had a huge detached garage. I should have turned it into an ADU. It would have been easy. That thing would have been a cash flow monster. But you get to a point, and I know, like, people are like, right now, real estate's such a buzz, right? Everybody's in real estate on social media, this and that. But you really got to develop a step-by-step plan. And I think, like, a lot of people call me, and this is rolling into our next topic. A lot of people call me, I want to invest. I'm like, okay, do you own a home? And a lot of people out there, like, they kind of diss, like, they think, oh, owning a home's not investing. I'm like, BS. That you have to look at it a different way. It's like, house hacking is the number one way to create wealth, I think, starting out, by far. Unless you have money or a family member with money, how else are you going to do it? I was listening to another podcast, and the guy on the podcast was talking about how he would start today and create $10,000 a month of net passive income, right? And I think leading into the next topic of house hacking, right? Like, developing a plan to use maybe FHA, right? You can get 97% financing or 96.5% financing. You need 3.5% down payment. You can buy a duplex or triplex. You could live there, collect rent on the other 2 units, save money, move out, the whole strategy. So I want to talk about your book, The Everything Guide to House Hacking, and learn about your first house hack. And then also, if you can also kind of tell us about your podcast that you do, like how people can listen to your podcast, because I think you obviously talk about house hacking a lot, probably, in your podcast. So I think that'll be interesting. And then also, where is that list of 7,000? Do you ever share that list, or how do you get that secret list?
Yeah, I do. So I share it on occasion, not too much, not just because, not for any reason. I just, when people reach out and they ask for it, I send it over. But my house hacks. So I started, like I said, accidentally. I bought a 2-bedroom condo, and I lived there for a few months, and then I realized that I never even went in the second bedroom. And I said that I figured I should probably do something with this, and so I ended up renting it out for like $700 or $750 a month. My total all-in cost with HOA and everything was $1,100 or $1,150. So I was living for $300 to $400 a month, and I was like, okay, this is great. And then I learned about house hacking, ended up selling that condo, and I purchased another property, another form of house hacking, which sometimes goes unrecognized. People don't realize it's actually house hacking when it is. People think, which you mentioned is absolutely house hacking. What I just talked about is house hacking, where you rent out additional space in your property that you're not using. But there's also a house hacking strategy called a live-in flip, which is where you buy a property that's a little bit run down, you essentially flip it while you live there, and then you sell it on the back end. And there's benefits to that as well. So that's actually what I did with my second property. Was I bought a property that was habitable, so I could get a conventional residential loan. I didn't have to get a flip loan or a 203K loan or anything like that. I just got a traditional loan, but there was definitely some things that could be updated to provide value. So I did a bunch of landscaping, painting, some relatively minor rehab to it. Lived there for 2 or 3 years or so. And then I was going to keep that one to rent, but when I thought about the numbers, I could collect $200 or $300 a month in cash flow, or I could net profit almost little under $100,000. So I said, okay, it's going to take a really long time to make $100,000 from this property. So I'm better off taking this, putting it into some more rentals and doing some more stuff with it. So I sold that property, moved, and I bought another house hack. So this is my third. I bought a duplex. I live in one unit. It's a townhouse style unit. I live in one side and I rent out the other. And that's kind of been my house hacking journey.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Now let's talk about real quick, if you don't mind, RV hacking. And are you actually doing any right now, or is this?
Yeah.
Okay.
Yeah, it's a focus for me for sure. So what happened with the RV stuff is that I raced motocross. That's where like really my background is in racing motocross. Ended up taking a 12 year hiatus, and I just got back into it again. And when I got back into it, I started going to the races just in my pickup truck and my bike. And I remember I grew up pretty much for 10 years living in an RV with my dad, traveling the country racing. So I was very familiar with them, but they're expensive. And so I didn't want to put up the money to buy an RV to go racing. And then one day it just kind of, I don't know, maybe I was driving home from the races or something, and it kind of clicked in my head. I said, well, I house hack and I do all these other things to kind of hack how I can buy other things. So why wouldn't I do that with an RV? And so I actually had a guest on my podcast who was into RV rentals. And I think that's what kind of flicked the switch for me. And so I said, okay, I'll buy an RV. I'll rent it out when I'm not using it. Ideally, if I can at least just break even, then I could use it for free when I want it. And even if it just reduces my cost, maybe I pay a couple $100 a month to keep it myself. And so that's how I got into it. I ended up like RV hacking, basically like I do a house. And then once I got into the RV space, I realized it's actually a cash flow machine, and it makes a lot of cash flow. Now there's downsides to it, but we'll see how long this extends for, but it generates a lot more cash than I expected. And so now I don't typically use it too much myself. I bought this one in August of last year. So I've been doing it about 6 or 7 months now. And I'm planning on buying a second and maybe a third here in just like a month or two. Probably one to use more myself and the other one to rent. But yeah, so for right now, I haven't even been using it myself too much because it just makes so much money to rent.
And so what are how much did you pay for that first RV?
60,000.
And did you finance 100%?
100%.
And then what is it kind of averaging out after expenses and everything net wise? Like after you pay your debt and, maintenance?
Per month or per week or per trip or?
Per month. Like what do you net at typically an average a month?
So anywhere from 3,000 to 5,000 a month is very real. So I have just an example. Somebody just booked with me for this coming summer. They're going on a 3-week trip from the beginning of July. I forget if it's June or July. So either June or July, they're going on a 3-week trip, and that's going to profit about 5,000 or 6,000.
Wow, that is amazing. The last couple of months, I've gotten so interested in all this like kind of stuff, and so is there like a Turo type of website like you can list on?
It's more like Airbnb.
Yeah.
But yeah, so there's an Airbnb essentially for RVs. It's called Outdoorsy. There's another one called RV Share. Very similar to Turo or Airbnb, but for RVs. The reason I like RVs a lot better than Turo is because with Turo, if you think about it, you can get a car, your monthly payment on the car, because you can only do a 3 to maybe 7 year term. Your payment is going to be very similar to what you can get for an RV, because you can go out to 20 years on an RV. And so your monthly payment on a car is similar to what you can get on an RV, yet your rental rates on the car are much lower than what you could do on an RV. With an RV, my rental rate is $250 a night, whereas on Turo, you're looking at $50 to maybe $150 a night, depending on what kind of car you have and where you live. But you have the same debt service and much lower nightly rate. It just makes so much more sense with RVs.
That is unbelievable. I mean, yeah, I like what you said before, because we're in a weird time with COVID and everything, and maybe more people are traveling than they normally would. So, but even if you stress test that, it sounds like no matter what, it's going to be generate 1,000 to 2,000 in its worst months. So
my thoughts on that, I had the same case, issue. So I said, okay, well, maybe this is just a COVID trend. But what I ended up finding was when I went to go buy my first RV, I ended up going to the small dealership west of Boston, and I ended up getting there. I met this little old lady just so happened she owned the dealership. And so I ended up being a podcaster. I've gotten pretty good at asking questions. And so I sat there and I just picked her brain for, I think we ended up talking for about 2 hours. She broke down her entire business for me. She has over 70 rentals on her fleet. She has an entire dealership there. She just started renting them that year that I had, selling them the year that I had gotten there. But she had been doing RV rentals for 33 years prior to that. And so to me, I said, okay, well, this woman has been in business for 33 years, exclusively doing RV rentals. That tells me that this, maybe this trend is stronger now than it has been, but that tells me it's not just a trend, right? It's been around for a long time. So that being a stock investor again, I went home and I said, okay, what other instances does this happen? And I ended up finding that Avis Budget, which is a publicly traded company, purchased an RV rental business back in the 90s. Back in the 90s, one of the RV businesses did over $100 million in 1 year in rentals. And so then I started doing a little bit more research. There's other companies like RV Cruise America. These are these massive, massive companies that own hundreds and hundreds of RVs that do RV rentals. So I said, okay, I don't think this is a massive trend. Or sorry, I don't think that this is just a trend for COVID. I think this is an actual business. And that's what really got me in kind of over the edge and allowed me to purchase the RV because, and then the other thing I did was people think it's a little crazy to go 20 years on the term, which I agree with, but I saw that as a way to de-risk it because if you go with a 5 or 10 year term on that, you're locked in. You can't change that to 20 later unless you refinance. But if you run into hardship, you're stuck at a 5 or 10 year loan. Whereas if you start with a 20, you can always pay that down at 5 or 10 years if you want. You could pay it down way quicker. But if you run into financial trouble, you at least can fall back on a 20 year, which is a significantly lower monthly payment. And so for me, I said, okay, I'm happy with I'm understanding the business model. I'm understanding the trend. Now my loan is only $440 a month because I extended it over 20 years for a $60,000 RV. Worst case scenario, I can cover $440 a month for a period of time. And really at $200, $250 a night, that's 2 nights of rental. Like I think even in the worst of times, it should rent for at least 2 nights, 3 nights a month to cover the loan payment.
That's really cool. And like, if you hit those, if you can average those numbers and you have 2 of them, that basically covers all your living expenses and your fund money. I mean, most people, unless you're living a luxurious life, can get by probably at 10 grand a month, right? Like you cover all your financial independence money with 2, and you can finance all of it. It's
yeah, I mean, I don't think it's unrealistic to say you could almost hit financial freedom with 3 RVs, 2 or 3 RVs, depending on which market you're in, depending on what your expenses are, et cetera, et cetera. I think 2 to 3, you could probably hit pretty close to financial freedom for a lot of people. Now, the downside, all of this we've found is great, but it's not perfect. You have a depreciating asset and the RV loses value. In real estate, obviously appreciation is one of the 4 pillars of real estate. With RVs, you depreciate that asset over time, which is not great, but they hold their value better than cars typically, and they hold their value and are usable for much longer. One of my best friends had a 2000 RV and it's 2022. So it's 22 years old and it still worked perfectly fine. So they do have a pretty long life, but that is something to keep in mind. You have to worry about transmissions, motors, those things can be expensive if they have issues, and it is depreciating. So for me, those are things to keep in mind. But yeah, I don't think it's unrealistic to say between 2 and 3, maybe 4, depending on your expenses to hit financial freedom.
Yeah, I have so many questions, but I'm not going to ask all of them because we're already going up on our time. But that is really fascinating. Like my main questions are, obviously you have to get the right insurance that you're going to let multiple drivers. Where do you store it? Where do they pick it up? And then is there air DNA for RVs?
So I'll run through those 3 things quickly. Insurance, I have an insurance policy of $750 a year for myself. That does not cover renters. That's just for when I use it. I figure that's cheap enough. I'll pay $750. Now, when you rent it on one of these platforms, the renter is required to pay $30 a night to get their own insurance for the rental. So that covers the rental when the renter is using it. You can also get an additional policy through a company called MBA. There's some other ones that do rental focused insurance, but for me, I just use the insurance that comes through the platforms. I just keep the RV in my backyard for right now, essentially. Well, in my driveway. I have a pretty big driveway, even though I live in a major city, but I still just keep it in my driveway. People come and pick it up. I've actually streamlined that because I like passive things. So they have videos they can watch on how to actually use certain things in the RV. I leave the keys in a lockbox. They come and pick it up. They go on their trip and they come back, they leave it, drop the keys in the lockbox, and that's pretty much it. And then the third thing was AirDNA. No, there is no platform for it yet. I actually want to build one. But the problem is the terms of service of RV Share and Outdoorsy don't allow you to scrape their data to build a platform like AirDNA. But I would love to build an RV DNA. And I've been trying to figure out how I can create an RV DNA and get that data for it.
That's amazing. So kind of wrap up. I mean, I'd love to have you back on the show because I feel like I could ask you a lot of questions, but what are your goals over the next 5 years? Like, what are your goals and what do you do for to stimulate the mind? What do you learn? What, like, business, personal development? It seems like you're a rather young guy, but you've done a lot with your life already, and you're already don't have a job, which is great. How old are you, by the way?
I just turned 27 last week.
Yeah. Amazing. I could be your dad almost.
My dad's not much older.
Yeah, that's like funny, actually. But my wife is only 31, so 13 and a half years younger. I'll give you that. If you ever get married, make sure she's younger. That's a good tip. But anyway, how'd you become who you are? Like, what do you do on a daily basis? You're driven, obviously. I'm just curious what rocket fuel you're drinking.
Yeah. So I in terms of my goals, that's something I need to get better at. I honestly don't have my 5-year goals planned out because I always come up on these new opportunities. I got offered the book deal to write a book. I had no idea that was coming, and I had to jump at it. It's from Simon & Schuster, one of the top 2 or top 3 biggest publishers in the world. So I had to jump at that opportunity. I didn't see that coming. I just got asked to speak at a Bigger Pockets conference coming up in May. Like, I didn't see that coming either. So I have all these things kind of coming my way that I need to set a plan for 5 years. I just don't have one yet. It's totally possible. I buy a plot of land, I pave it, I put up a massive self-storage facility, and then I have 25 RVs also on that lot, and I use self-storage and I do RV rentals out of it. That's possible. It's possible I have 20 single family houses in Texas. I scale that way. I'm not sure exactly what the future looks like. In terms of how I got to where I am, basically, I grew up, like I said, I was almost a professional motocross racer. I was 14 years old. I was about to turn pro about a year and a half out, and I was the number 2 racer in the world. And so I put in a lot of work to get to that point. I had my dream ripped away from me right as I was about to achieve it. And so I just think from such a young age, I started racing at 4 for about 10 years till 14. And, it's just innate in me to be a hard worker because of what I had to put into racing. And so when I got into the world that I'm in now, all of this stuff is relatively easy compared to what I was doing back then, and a lot less risky, at least in my eyes, because every time you throw a leg over a bike, you're risking your life. So to me, potentially losing a little bit of money is not the end of the world. And so that's where my hard work and determination comes from. Nobody in my family, like I said, has ever invested or done anything like that. And they're great. I have a great family, a great support system, but they don't live necessarily the lives that I want to live. And so I just got lucky to learn that early on and just get really passionate about financial freedom. And so I just work really hard to make sure that I can do everything I want.
Yeah, I'm very impressed. And I talk to a lot of very successful people, and I love, like, all your brain power and what you're doing is amazing. Where would you like people to follow you that might watch or listen to this in the future?
Yeah, I mean, you could honestly find me all over: podcasts, YouTube, Twitter, Instagram. But the best place I'd recommend is Twitter. It's at the Robert Leonard on Twitter or Instagram. I talk about all this different stuff there. So if you want to find out more resources, I have a course on RV investing. So if people want that info, they can ask me for it. I'll send it to them. But yeah, social media is probably the best place. And then I guess if you want the podcast, just search Millennial Investing or Real Estate 101 in your favorite podcast player, and it'll come up.
Perfect. Well, thank you so much. Thanks everybody for watching or listening to this podcast at some point. And today was just another great episode. I'm actually interested in this RV thing. I'm going to buy your course, and I've been looking to increase my cash flow, and this is actually something I'll do. And I kind of want to, I have an idea for a podcast to keep. I enjoy doing podcasting, but to take courses and then implement and then talk about it. right? Like, and like, cause there's like, I get like shiny object syndrome. Not that I can't stay focused, but when I see somebody that's going, hey, like you can do this and you can make $5,000 a month if you do it right, or $6,000 a month on an asset. And then I use my lending business like, oh, well, I can go and finance the whole thing. I have no money out of pocket, get the longest term. I agree 100%. Even on loans, you always want the longest AM you can. And that's why people sometimes don't like the credit unions, because they only do 20 or 25-year amortization. You can go get a DSCR loan at 30-year. But anyways, because I've been exploring so many different business like models, like what can I do semi-passively or as passive as possible, and explore those, because that's really the nature of what I see the majority of people looking for in life is setting up. It's not that I don't like to work. Like I can tell you're a workhorse as well, but we like to work on projects and passion projects versus like, oh, I have to go do this and that. So anyways, that's just an idea for my podcast I'm going to do. And it'd be kind of fun to like take a course, follow it step by step, and then like, hey, here, I just went and bought it. Cause this is something literally in like 3 weeks, you could probably get up and running.
Yeah. Less.
Yeah.
Less.
All right. Well, anyways, I'm gonna send me that link, please. I'm gonna sign up for it. And this is something, because sometimes I'll take a course and then I'll go through the course and I say, this isn't for me, right? Like I don't mind spending a little bit of money and just going, hey, I don't like this because of this, and I won't do it. But this is something I would definitely invest in to learn the process.
You get to use it. It's awesome. Yeah. You get to use it too. If you want to take it for a weekend and go on a trip, you get to. Yeah,
it's like perfect. I love it. So anyways, thank you so much. Had a lot of fun, and you're a great guest. And
thank you.
And I'm going to follow you. And now I feel like I have a connection with you. That's the other cool thing about podcasting. But anyways, guys, we'll see you on the next episode.